Hi guys, so I just want to do a quickly review of my week, a quick weekly review of how my week went, the trades I took, the opportunities I saw, and from on the 5th of January, which is from on the 5th of February, which is Monday, till the 9th of February, which is Friday. So I only took 2 trades this week. So I'm just going to quickly do a review, show you the trades I took, how I did. I still have one of the trades running, which is a buy I took on GBPUSD on Tuesday. So I still have it running, and now let's get on the chart. So I took 2 trades this week. The first one was on GBPUSD on Monday. Simple stuff. So firstly, right before the London Open on Monday, I checked the DXY. You can see my markings. I'm sorry if this might be a bit not exclusive. I promise the next one will be more exclusive. So this is just gonna be very quick because I overslept and I need to get up. I overslept and I need to head somewhere in the next 1 hour. So on Monday, on the 5th of February, I saw that DXY was shooting up. This is what I saw. I saw the DXY was shooting up. We've taken out some liquidity here, and it was shooting up, making some push phase. So now let me go on to the lower time frame, the 15 minutes. So seeing that the DXY was shooting up, I remember we were having a push phase. So I didn't see. Now that's the number one. The DXY was shooting up, and the DXY and the GBPUSD is negatively correlated. When it goes up, GBPUSD sells, and when it goes down, GBPUSD buys. So it was shooting up. And secondly, when the market opened on Sunday, you can see this slippage, this gap. This gap here shows me it's telling me something. It shows the DXY really wants to move more further. It means it wants to move upward more. So then the market, opened and with some gaps, and it did fill. The market came back and filled the gap. And if you know how to trade the gap, you will know that when price gets to a gap in trading, it's either it mitigates the gap and shoots up or down, or it mitigates the candle right before the gap. I will make a video on that next, on how to trade gaps, for those of you that don't know. So when I saw those two things, that the market came back to mitigate the gap and also the candle before the gap, and we were around a sensitive point on that Monday morning. This is the 5 minutes time frame. So I saw that this is Asian range. This is an indicator I use. So the market also took out the liquidity around the Asian range. That's like, we have like 3 to 4 confluences now. Number one was the fact that The DXY was shooting up. Number two, it opened with a gap on Sunday night. Then the gap has been mitigated, and also it mitigated the candle before the gap. Then we also have the Asian range swept. The Asian low has been swept, and this is a very clean entry pattern, because the entry pattern didn't only formed, it formed with a liquidity sweep as well. Look at, then it shoots up. So after determining all these, then I came to GBPUSD. I came to GBPUSD on that same morning on the 15 minutes time frame. I came on GBPUSD. For the sake of this video, like I said, it wouldn't be more in depth, which I apologize. I promise to go more in depth in the next review. So I've checked some higher time frame confluences and saw that the likelihood of the GBPUSD going down is very high. So that prompted me to check the 15 minutes time frame. When I checked the 15 minutes time frame, I saw that the Asian eye here has also been taken out. The Asian eye has been taken out, and we had a little sweep around this place as well on the GBPUSD on that morning. Simple stuff. When I got on this chart, I didn't think more than 10 minutes. Then I went to the smaller time frame, which is 3 minutes. I went to smaller time frame on the 3 minutes. Then I sold. I took this trade. This was when I sent it to the group. Let me show you. I sent it to my channel. I'll put the channel link in the description below if you want to join. I'll put the channel link in the description. Oh, apologies. Yeah. So can you see? I sent it on the group. I said it was gonna sell, because I've done some higher time frame analysis that gave me some confidence. I saw that it was gonna sell. Then I said it on the group. Then barely 2 hours later, look at what we got. Look at what we got. Look at what we got. So that's the first trade. Then the second trade happened during London session. Sorry, during New York session on Tuesday afternoon. So this is what actually happened. I've done some higher time frame analysis and saw that the JPY index, which is the Japanese index, is gonna sell. I've marked this zone for a very long time because I did cut some GBPJPY trades in January. So I still got the conviction that the JPY index would sell more, it will go down. So on that Tuesday evening during New York session, looking at my markings on the JPY, I was still having this conviction that the JPY will go down, and like I said, and if you don't know, I want you to know that the JPY index is also negatively correlated with the GBPJPY. So when the JPY index is going down, the GBPJPY goes up, and when the GPY Japanese index is going up, the GBPJPY will go down. When it goes up, GBPJPY goes down. When it goes down, GBPJPY goes up. So they are negatively correlated. So Tuesday evening, I saw some intentional move that the GBPJPY will sell. So all I was looking for was to buy on GBPJPY after seeing that the Japanese index is going to sell. So I didn't think too long on this trade as well. It was a very quick decision, because To be very honest with you, I wasn't on my PC when I saw this opportunity. I wasn't on my PC, so I took it on the road while on my phone. So I sent it on the group as well. I said entry upon lower time frame. Look at this was when I sent it Tuesday evening around sorry, I sent the trade actually on Monday evening because it started developing. The opportunity started developing on Monday evening. So I took it on Tuesday evening. I didn't post the execution, but I took it on Tuesday evening. This was when I took the trade. So now it's still running well. The trade played out. This was before and this was the after, and this was my MT5. So I'm still holding this trade actually because it's still playing out nicely. So apologies. I'm gonna drop a more in-depth review next week. So basically, when I check the JPY index that it wants to go down, when I went to the GBPJPY, checked my higher time frame and saw that after price mitigated this zone here, it went back up with a long spike. This is saying a lot. This spike here is saying a lot. That's like the buyers pushed very strong. And this here is what we call the buy side liquidity. So it gave me more added confidence for why the price would likely go up. Then on the smaller time frame, this was where I executed. On the smaller time frame, I waited from some little what's it called, liquidity sweep. Then I entered. So this trade is still going nice. My target is just right here. And if this zone, this buy side liquidity zone, if it closed with a candle body, I will look to hold it more further. But if it closed with a wick I'll just close, and that's all about this week. So it's basically simple stuff and what I spot on the chart on a daily basis, and I try to replicate it. So if you find this helpful, make sure you like and subscribe and turn on notification bell in case I drop more video. So see you guys next week. Bye bye.